that I didn't have on here that I want to show. Oh, nice little top there. Fungal.
For Meta information reporting that Meta's chief technology officer saying the company plans to correct some of the changes made to human resources and content moderation policies. Michael Echo Tango Alpha. CTO acknowledging that the company mishandled the introduction of these new content policies. OTIS Otis authorizing a $2 billion share repurchase program. Oscar Tango India Sierra.
Today's Thursday.
Black Sky BKSY has been selected
That
for a
was
$2
nice
million
shit.
Luno IQ contract.
Can I please check the Steam
From
room?
Kilo Sierra Yankee.
Can you please close the talking guy? It will mess with the summary of the flow show. What talking guy? What are you talking about? Squawk? You talking about Squawk? Yeah, of course. I'm not going to use Squawk on for the webinar. You nutball. Alright, the other shit I'll leave for Sunday webinar here. Alright. Is it 4:15? It's 4:15, right? I think you got Apple some more selling into the after the close. Took a nice little poop. Alright, there's actually a bunch of stuff I was gonna go over. Got some interesting things, but I'm gonna save some of it. I'll save it for the Sunday webinar. And we'll get some updates. You know what I mean? We'll get some more recent updates there too. So I'll go over some of the ones we usually look on here. Actually, had a little bit of a pullback day in the market. I think really interesting setup going into both the inauguration, with the market actually closed on Monday, and earnings season, right? And the heart of earnings season, banks, so far so good. The banks, again, the numbers have been good, but I think what's even more bullish behind the group is positioning. You get some pockets of heat on a short-term basis when they're hot. You get traders and more traders involved on a short-term time frame. But overall, and we'll take a look at it hopefully if I remember, because I didn't post the chart yet. But overall positioning, fund positioning in financials is still quite favorable because of the concentration into mega cap tech growth for such a long time, the semis and stuff like that. So the banks, again, positioning wise, look really, really good. And barring any credit contagion across the globe, they probably will remain dip buys. All right. So that being said, again, earnings so far, what we got from the banks, the big banks, they've looked good. J.P. Morgan new highs. The underbelly of the financials look good. Next week we get Netflix, and then the following week after that we get some of the big boys, as we like to call the heart of earnings season. I think you got an interesting setup. Tomorrow you have Jan OPEX, which is a pretty big OPEX, especially in individual names. So if we hang around here, right, whatever the pin number may be going into tomorrow, that shouldn't surprise any of us. But going into next week, you got the Trump inauguration on Monday, and like I said, then you got earnings, so you got quite a few catalysts, and a little more closely followed. Some of this economic data, a fear of rates rising again, a fear of the Fed may not be able to cut as much as we were hoping, that sort of thing. So you get some movement on some of the economic data again. So that's always a catalyst there. But I think where we left off, I know for STEAMROOM members, I don't know about you guys on the Thursday webinar who aren't members, we came into the week pretty much set up for a squeeze, right? What we were talking about on the Sunday members only webinar, okay, was simply this. If you've been playing these tactical setups for the past year and a half or however long they've been working out, where a lot of our shorter term sentiment positioning indicators flash green, and you're kind of looking for that snapback squeeze in a sense. You had that set up again coming into this week, right? So if you've been playing that, or if you've been playing off that, there was no reason not to play again off those signals, okay? What we discussed a little more in depth on Sunday night is eventually one of these signals are going to fail. Now, you may be fortunate enough, and this could be the case too, you never know, where if you're playing a short-term squeeze, we were saying, right, to kind of get your cake and eat it too analogy, where you get the short-term squeeze and it may fail anyway, right? But one of these short-term setups are going to fail, and ultimately will get the healthy rinse that a lot of us who are in high cash positions are looking for, right? When? Nobody knows. I mean, that's why the game is difficult. There are definitely some different headwinds out there, right? As we discussed Sunday night, you got financial conditions have been tightening, credit spreads have been widening out a little bit, funding spreads have been unwinding. But from my experience, and again, we discussed this, from my experience, even though you have different dynamics at play, it's still hit or miss whether this is going to be that short-term setup that fails or not, from my experience, right? In other words, there's not any information you can look towards to increase your odds of finding success or finding the 1 out of 10 that fails, right? So that being said, you fast forward to where we are now, and this is the snapback squeeze, right? In my opinion, that's all it is so far. It may materialize to something more to the upside, or it can roll over and retest lows or another leg lower, right? Time will tell here. But what we've seen this week undoubtedly was that snapback squeeze off of positioning and sentiment being all sides on a short-term basis, right? Again, it's not voodoo shit. It's real positioning stuff in the market that creates these strong bounces back off some selling, right? You get VIX, you get a bid in VIX, obviously weighs on equities, and then right, a lot of times it'll happen into an OPEX week where people, you get a softer CPI than expected, or not as scary as the CPI is expected, and it's an excuse to monetize some of those puts, take off some of that protection, and that feeds into some momentum on the equities as far as the upside, right? It's when they catch groups leaning all to one side where you get these snapback moves. Now, these are on short-term time frames we're talking, right? I mean, Rontero is a big proponent of saying time frames are important. You got to know, you got to understand what you're looking for, what time frame you're trading, because it's a big deal when looking at this stuff. On a more intermediate term time frame, right? A lot of us want to see more weakness, more selling, right? We want to see offside positioning on a longer term time horizon, right? We want to see shaking out of some of these long term holders that haven't been spooked on any pullback we've seen over the past year and a half, because every single one has come back and ripped to new highs. When you get that group to puke, that ultimately sets up a real nice sweet spot long entry, again, over a longer term time horizon. Okay, where you don't have to be so inclined to or concerned about selling the quick rip because it might evaporate and disappear. Like kind of where we're at now, right? You got, on a short-term basis, you got this snapback squeeze, right? Now, if you were looking for that, you got to take this, right? You got to take this. You got to, if you want to still have a position, roll, trim down, do what you got to do. But if you were playing that snapback squeeze or short-term sentiment, you got what you were looking for. Okay? And in other words, what I'm getting at is if this rolls over from here, you can't complain now, right? You got what you wanted to see. Meaning, again, stressing how important the time frame is when you're looking at this stuff. Okay? You don't have big picture, intermediate or longer term positioning and sentiment on your side as a whole across the board. All right? We need more weakness to get that. All right, and here's some of, for those of you who have no idea what I'm referring to, right? Some of the signals we look at, right? So here's one a lot of us like. The short-term composite indicator. A lot of you guys have seen me show this indicator times on this webinar. You get down near that 10, and that's usually where you see, as I would like to put, a worthwhile snapback rally, right? A rally that, even if you're a bit early on your entry, when it shows up, you're going to make money. You're going to get paid, right? More than not, okay? And you can see we kind of touched the 10 and we're back neutral going into today, right? We've done it, and look, we've done this a couple times. This is the point I'm referring to here, right? This is not uncommon where you get these sell-offs, you get shorter term traders playing for more downside, right? Puking up their lungs, and then they reverse it, right? Again, no coincidence. But the point I'm making is that one of these always eventually fail as a trend gets long in the tooth, right? The longer you go without one of these fail, the closer you get to one of these fail, if that makes any sense. Okay? So that's why a lot of us are kind of looking for that right now, right? Being ready, anticipating something like that right now. Because, again, we haven't had one in a while, right? So that's where we are now, right? We're not, I wouldn't say we're overheated on the upside, especially after today. We got a little cooling off here. But I think what would be most healthy, at the least, even on a short-term basis, is kind of even a little retest here. Because at least that gives us maybe a little more lasting power as far as bullish momentum is concerned on the upside. Okay? But again, that's more opinion from me than anything else. Some of the other shorter term indicators, we follow the squeezometer. A few of you guys are familiar with that. We show on here several times, right? Back to more neutral. I think the low was around 40. And this one here, tactical sentiment, again, same logic here. Green zone, we got a green signal. Now we're above neutral on a short-term basis. Will be lower than that off today's weakness. All right. So the reason why I wanted to start with that is that's a short-term setup here, right? There's nothing more. You don't want to overthink things. You don't want to make it any more difficult than this game already is. Okay, we're kind of at a spot now where that squeeze has taken place. Okay, we're going to get post OPEX here and go into earnings season with kind of a little cleaner sentiment and positioning profile, but we're not necessarily set up for that unwind squeeze anymore because of the move we've seen so far. Okay, I think that's a good segue into now intermediate term, bigger picture stuff, and that's where maybe a lot of you players who possibly are not in the steam room fit in. Those of you who have a job or can't be concerned that if there's a squeeze, you're not around to sell into it and you end up losing money. So you're investing or swing trading on longer term time frames, more of possibly months, right, or multiple weeks in a sense. Bigger picture wise, it's not that bad. I think we had an issue, if you guys remember, we discussed going into these highs here. Right? If you remember what we discussed, we were at the crossroads where if we continued to melt up, we would have a big problem because that would reel in more bulls, shake out even more bears, and then you have a really lopsided trade there. But we've had a healthy digestion here now, right? So the risk profile as far as positioning and sentiment is concerned is a lot cleaner. And I'll show you a few quick things here, just so you can see how cleaner it is. Stuff like you guys probably already follow the traditional stuff like AAII sentiment survey, right? So you were up over 40, I think it was, or almost 40 on the bullish side, right? Percentage wise, now you're down to 25. So another lower reading this week. NAAIM, that's come in. You had a wash there off elevated territory. Again, these are things you might be more familiar with. Breadth-wise, if you remember, that was a big topic that we discussed. Even though it was a couple percentage points off new highs, the underbelly, right, the internals of the market were ugly. You had groups like the materials and staples and commodity related stuff, cyclical related stuff, basically couldn't catch a bid for multiple weeks. All right. They've bounced a little bit, but still are set up for more upside if they want it. All right. Let's take a look at one of those quickly. Here's like materials. Okay, so this is what we just dealt with here. While the market was kind of just chopping around, it kind of had a bottom fallout in a lot of these groups, like materials, the home builders, even healthcare, right? And you could see the relief this week. You can see the relief this week, some more than others. Here's home builders. Here's materials. What are they doing again? Materials on what? I just had them up. XLB? Yeah, XLB. All right. So these are set up for more upside. I think if we do see a breakout here, right? If we do see kind of a breakout of this downtrend, I think those groups are probably going to play a big part in it, right? Even if we're stuck in consolidation, I think those groups will probably play a larger role on the bullish side of things. If we take the bullish route here, right? Here's another look that we looked at. Equal weight S&P 500, right? Look like absolute crap. failed through a downside niner, kept selling, and then the sellers got tired. Um, a lot of the groups that make up these S&P 500 sectors are really washed out, breadth wise, positioning wise, the whole enchilada. So you started to see sellers get a bit tired, and now you got some squeeze to them, right? So that's one thing I would be keeping an eye on as we get into earnings season. Let's see, anything else here on that side of things? On this side of things, here is hedge fund exposed single names we look at quite regularly, right? Still nothing really going on there, hugging the zero line. So overall exposure in individual names, they got no bias, right? I mean, if you look deep and break down what they own, there is some interesting information, right? As we said, mega cap tech, mega cap growth in general, the semis, even though the semis are a lot cleaner right now, that's where all their long exposure has been for quite a while. Okay? And if you think it's a coincidence that the semis can't get out of their own way as far as a group is concerned, after significant all sides long positioning in the semis, I think you're mistaken. Right? I think that's the number one reason why the semis have been having trouble as a whole. Okay, they're just over owned. Even Nvidia, which has been much better than a lot of the other semis, is just extremely over owned. And when things get over owned, they have trouble on the upside. Right? So if you look deep into the breakdown of some of this positioning stuff, you can find, you got some interesting things going on that we started to talk about. But here's hedge funds and single names. On the credit side, what we've been talking about here is you kind of have a divergence where credit spreads have been widening out a bit as equities were still holding up. That's kind of equities have kind of caught up here now, right? Because you've had an equity market pullback. So there's not that big of a divergence anymore here. We'll see going forward if there's anything revealing from these credit market signals. But nothing really to talk about there now, in my opinion. All right. And what else is there that we talked about? I just saw in this webinar. Again, STEAMROOM members on Sunday will go over some of the key things to keep an eye on here. Here is macro hedge funds in U.S. equities as a whole. They're kind of what we're seeing, right? Kind of what we're seeing on the other indicators. Nothing really going on there. A little bit of a further wash of recent. And I think these are global macro funds in U.S. equities. So little different wrinkle, but same thesis. Goldman put out some interesting stuff that looks promising for the markets as a whole. Here. So this is positioning from Goldman Prime in single names versus macro ETFs and indexes. So single stocks here, the black line, right? Again, this is probably not new to anybody on this webinar. We've been talking about this ad nauseum. But I think this is the most bullish thing going for the equity markets, and has been, is that the fund side of the equation, right, the pros have really just haven't taken the bait on the long side. They have not been excited about the equity market as a whole, right? They've been overly excited about certain pockets, right? As we mentioned, the semis, some of those mega cap names that everybody was piling into. But markets as a whole, they really have no interest. And again, I think that's what the change we started to see from the summer, last summer, late summer, when we started talking about this. You're starting to see outperformance from other things, right? All the performance was in the semis and the mega cap names. And if you owned anything else, you probably lost money, right? But that's all anybody cared about and hedge funds and funds were in that same boat. Okay. Now what we're starting to see is right the financials. You get more alpha out of the financials than you do the sevens. Right. You got more alpha out of underbelly software than you do the semis. That Mag 7 trade has been broken up. I don't even know if people talk about Mag 7 as Mag 7 anymore, right? Because it got so overowned. So, that's a good thing. The glass half full here, no matter what, even if we get a further rinse, in my opinion, on a shorter term basis in the equity market, is I think this bodes well for a bid in equity off any further selling, right? Because they have cash, their exposure levels are low, and they're more inclined without some sort of credit crisis or some exogenous event out there. They're probably more inclined to cover shorts or even start new long positions into any weakness in a lot of these groups because there's no supply there. Nobody owns them, right? Nobody owns them. So I think that's the most bullish pillar of the market, and has been and continues to be. I think on the bearish side, and we're a little better shape than where we were a couple weeks ago. But I think on the bearish side has been some of the speculative appetite we've been seeing out there, especially from retail, right? So you're getting some of these AI and quantum stocks quadrupling in a couple of weeks. Retail options activity has been at highs, but they already have been taking hickeys there. I mean, have you seen the quantum names? Right? And guys, I'm not an I told you so guy, and you guys know that because there's no I told you so's in this game. This game's impossible. Nobody can make calls, right? Nobody's got any sort of forecast tool. But this is the risk you take when you're looking to buy names when everybody and their mother is buying the same thing. Right? When everybody's looking to play the same stocks, there's a lot higher probability of something like this happening. Okay? Regardless of what you think about the company, right? I have no idea. Like right now, I see Rigetti, zero revenue, and they're bleeding. They're not even close to profitability, right? But at the same time, I have no idea what the future holds. I have no idea what the quantum computing is or any of that shit. And I don't think everybody can have an opinion, but nobody knows what the future holds. All right, so Rigetti could be an $80 stock a year from now, for all I know. But the point I make is that when you're buying, right, up here, when everybody else is interested, okay, this is what happens, especially if you don't have any fundamentals behind it. But even names that are fundamentally sound, well, right? We see it in Apple recently here. Okay, so don't think I shoot down ideas when you guys are asking me about, oh, what do I think about the quantum names when everybody is talking about them? Ideally, right? Ideally, and you guys know, we talk about it on this webinar a lot, right? That's where we try to use sweeper activity, where the real edge, in my opinion, is in sweeper activity, is when you're starting to see sweeper interest or accumulation when nobody is looking at the name, right? When nobody knows it exists. That's where the sweet spots come from. That's where the biggest edge out of flow is. Not when everybody's talking about the flow in our GTI. It's when nobody's talking about it and it's seeing action. All right? But that little rant was the start of, this was kind of the problem in the market. Right? You had this excitement. This is just one stock. I could show you 30, right, names that look like this. You guys know them. Okay? That type of behavior always presents a problem, at least on a short-term basis. The longer it goes on, the bigger the problem will eventually that comes. All right, so I feel better that these things have corrected in a sense, right? A lot, there's nowhere near that excitement behind these small names anymore. I mean, they basically were out of control there for a period of time. Okay. Yeah, and you know what's interesting? Like you see, right? A couple of us, well, we day traded it. I don't know, maybe a couple of you guys in the steam room held it overnight, but was it? When was it? Holy shit! Today's Thursday already. God, so I think it was like Tuesday, right? Was it? Yeah, it was right here. So anyway, these names got hammered. Okay, they were down 4 or 5 straight days in a row, looking like they were going to zero. There was basically a lot of put activity in it because so many people are long and other people are betting on the downside. And then we saw a little pocket of speculative call sweeper activity show up, and it kind of stood out a bit to us, right? Somebody is taking the other side, looking for some sort of snapback move, squeeze, after a 4 or 5 day sell-off. Right? So you can see how looking at the flow through those lenses, you can see how that presents an edge as opposed to chasing, right, when everybody else is buying. And here's another thing, like I wanted to share with you guys. When you're buying when everybody else is buying, okay, and you're tailing flow when there's so much of it, think of it, right? You're basically riding the coattails of every run-of-the-mill Joe Blow out there. That's what you're looking when you're tailing that type of flow. All right? When you're tailing Rigetti flow up at 18 and they're rolling into the 30s, oh my God, 30, right? When all that flow is going off, that's what you're tailing. Right? You're tailing that type of action. You want to be on the total opposite side of that flow. Right? Now, don't get me wrong. When things are really active, right, you can get in the middle for scalps on an intraday basis. That's a different story. You guys know I'm not talking about that, right? I'm talking about the oohs and ahs, especially over social media, you hear when these things, catch these big bets or a lot of action when everybody's playing them. That's not impressive to me, right? And you can see how that would bother me as a contrarian at heart. But anyway, the moral of the story here was that the problem we were talking about in the market regarding retail and some of the speculation out there I feel better. I feel better that it's chilled out. Okay? So to sum it up, we got the snapback squeeze off short-term bull signals, right? Kind of what we've been seeing for a long time in this market now. I think now we're at a point where we're at a spot, upper resistance, where we can possibly break out or roll over, stay in a range, whatever it may be, going into the start of earnings season, right? And what I just mentioned, I think, is the issue here. Earnings season, right? What's likely going to be the catalyst that gets shit moving in either direction is probably going to be the reaction to earnings. And I don't care who you are or what you think, you're not going to sell me by telling me you know what the reaction to earnings are going to be in a lot of these names. All right? No one's going to be able to sell me on that. So the point I'm trying to make is it's kind of it's a bad thing because you can miss a lot of moves here, right? Or you could also save money by not making a move that you probably were looking to make, and there was a sell-off of earnings. But I think the bulk of the big momentum out there, the larger moves that people are going to be oohing and ahhing over, are going to be earnings reactions. All right. So what we got to try to do, I think, is try to stay away from some of that and see if we can find any opportunity around that. Right? You understand what I'm saying? the only way you're probably going to catch a decent move here on a swing trade basis is if you guess right into earnings. Plain and simple. And it's a crapshoot. It's a crapshoot. You know, on a more short term basis, let's say on a more tactical basis, um, there'll probably be more things to do. I still think, especially like if some of these groups like materials, if there's further selling off of earnings, I think there's a good possibility buyers will show up because they've already been um, selling off in a decent way, right? So I would look more towards post earnings for opportunities here. We say that all the time anyway, so that's nothing new. But I think we have a really interesting setup. I think what takes away from that setup is going to be earnings season here, right? I know I do, and those of you even a bull at heart would probably we're rooting for further consolidation or even weakness through at least the first few weeks of earnings, if we can have our way. All right? Because we'll have more information regarding earnings and the fundamentals of certain groups and names that we're probably interested in. And we'll be able to get a clearer picture on the flow and see what groups are seeing rotation post earnings, which is always important. All right, so that's what we're kind of biding our time here for the next few weeks until we get through the week of whatever it is, Apple, Amazon, right? All the big boys, Google, they usually all report in 1 week. On a short term, have a good night, T. I'll see you Sunday. On a short term basis, okay, especially for those in the steam room, what I continue to recommend is using our short term indicators, right, as basically a compass if you're looking to, swing trade, short term trade, the S&P 500, NASDAQ, whatever it may be. All right. I think in between all that, you might there'll be some frustration and some issues. There's the risk of rotation. There's the risk that something may underperform because of how the earnings were in that group, right? That sort of thing. So I think it could get a bit confusing. So I think your highest probability for success is when you get these type of setups, and that's where you would look for entries there on, short-term overnight swing trades. Now, anybody have any questions? Yeah, I didn't want to go too deep here, and because I had to keep reminding myself where I'm talking to people who aren't Steam Room members at the same time. But there's some interesting things at play that are worth monitoring here. That are definitely worth monitoring here. If we do continue to get chopped, the rotation out there should be okay enough to where there should be ideas that present themselves. A lot of you may not like the ideas. Like, I give an example, okay? You look at this week, it's been a tough market, right? We've been talking about that. This is hard money to try to make money in this market right now. The backdrop is not easy for longs and shorts. I don't care who you are. Okay, because you got a kind of that tug of war action going on that we talked about, right? Financial conditions tightening, funding spreads, unwinding, right? Abating volatility, and then on the other side of that, right? You have where hedge funds aren't long and they get a little aggressively short and they get squeezed, right? You get a catalyst like CPI where it's a catalyst for that VIX unwind, right? And shorts get squeezed. And within that, you get these just mishmash trading, right? It's the best way to put it. You got the semis up, but the Qs are down because Apple's weak. is very erratic. It's very erratic. I don't know about you guys, but for me, right, especially when I'm looking to be a little more aggressive on the long side, right, when I'm at my best is when everything is lining up the right way for me. You understand? Like I don't need an up market, right? Because of the type of names I like to play. Sometimes I do better in a flat market, but some of the bigger picture signals out there for those particular names are signaling risk on. When there are risk off signals and you're looking for long opportunities into that, you might get lucky and stumble upon one, but it's just a lot more difficult to make money. All right. So I guess I'm in the game long enough, and that's what I think a lot of you don't understand. Oh, I appreciate your discipline and all that. I don't even think it's really the discipline. I think I'm in this game so freaking long that I'm just tired of spinning my wheels when I know I'm going to spin my wheels. Right? I think I'm more of a realist because of how long I've been in the game. You know what I mean? Does that make sense? You understand what I'm saying? I think I've been doing it so long, long enough I know that certain environments, I'm not going to blow myself up if I participate, but at the same time, I know it's going to be frustrating and I'm going to be chasing break even. So why do I even want to stress myself out? So I just kind of wait for, a fatter pitch, as they say. Doesn't have to be the fat pitch, but I like higher probability scenarios. Higher probability scenarios, right? So that being said, I think just now where I feel for the past few weeks, we're in a little tougher climate. That may, that could end. I don't know when that's going to end, but we're in a tougher climate, a tougher environment. Until we see signs of that coming to an end, I'd rather chill out and be a lot more selective and looking for opportunities, right? And just keep my eyes on the ball, waiting for those signs that it might be coming to an end. Right? Like I'll give you an example, okay? The sweeper activity, and now we're going to go into earnings season, so you can forget about the flow for the next couple of weeks. But even prior, right, the last few weeks, you guys have been hearing me say, right? One takeaway from the sweeper activity, right? If you're in the steam room and there's anything you're going to take away from what I'm talking about on the day-to-day basis in regards to the flow, right? If there was one thing to take away was that the flow was certainly not signaling risk on. Okay? By no means was it anything close to risk on. Right? No new names, heavy rolling activity, all the same active names. The biggest winners of this push higher are the ones that are still the most active in catching all the flow. Those are signs of a tired risk appetite. They're signs of at least short-term exhaustion. So until, at least for me, until I see that start to change, there's nothing that's going to excite me. Right? I think that's the main takeaway, right? And I've been telling you guys, nothing excites me right now. I can't get excited about anything. You understand? I can't get excited about anything. You have things that are set up, that there's a decent setup there, but outside of buying with a lot of time, and you can make the case for a lot of things right now that you could say, if you buy leaps or if you buy and you're patient. Besides that, I don't see anything that I'm jumping out of my desk excited for. There's no names out there. There's no Like, if put a gun to my head right now, oh, what name? I have nothing like that. I have nothing like that. Right? Nothing like that. Yeah, and yeah, to your point, Jake, like that's where the money is right now, right? A lot of these energy things. Okay. And rewind a couple weeks ago, right? We started to see flow perk up in some of the energy names, right? And you had the setup there, right? We've been talking about this energy trade for a little bit now, and it was a tough one, right? Even with it working out now, that was really tough long. Okay, but you had a setup there in energy where and the energy stocks, everybody is short, right? Nobody has any interest in getting long. Even the people like us who may want to get long couldn't make the argument of why we would get long. Right? That's how ugly of a setup you had with energy. But when people are positioned for that, that's you got a pretty strong floor there, right? You got a pretty strong floor there, and if all that negative whirlwind around it starts to little by little flip positive, that's when you make some headway on the upside, and that's what we're seeing. And what we're seeing now is a lot of the stuff that really hung in there and looked good, while the energy stuff looked bad. They're doing the best. Like, look at some of these names, right? Like LMG, crazy moves, right? A name I own, you guys, we probably talked about it quite a few times on this webinar with Flow, EQT. Right, so you got pockets of the energy market that had a decent look, even when they looked bad overall. The group, those are the ones that are doing the best, right? Where the traditional names like an Exxon Mobil, not doing much. Chevron started to move the last couple of weeks. The last couple of weeks here, you know what I mean? But nothing like some of the other moves we're seeing out there. These pipeline plays, right? They all have had killer runs. So if you can take advantage of these names, more to you. If you're interested in these names, I wouldn't chase, right? I would look to, if we see some new flow in new areas, like this might be a name to keep an eye on. AM. This is in an uptrend too. This one started to move. This is a kind of a newer name that's been seeing action. LBRT, but they all have been moving here of recent. You got short EQT today. Yeah. Well, listen. I don't play the short side, but I totally see why you would get short. This is nuts. This is nuts. This is a big move. Huge move. Right? Like I have left of EQT is kind of what I wouldn't say a runner, a little more than a runner, but kind of a longer term. I wanted to make a longer term play in the energy space, something I felt good about. And EQT was the one. It was well timed with the flow. We saw risk reversals come in, if you guys remember, where they sold puts to buy calls. Was just perfectly timed. But I already sold, and when I'm holding with no intentions on selling right now. But the point I'm making is, I wasn't planning to see anything close to this type of move out of it. It was more of a slow mover. That's kind of what I liked about it. It was more of a slow mover when I got it. Here's another one, a gas-related name that we've seen flow in, AR. A couple spots here, especially this one of more recent, right, where you had a little bit of nice digestion and they came in and bought towards the end of the digestion here. But now, you got big moves now. big moves. And another group that I'm keeping an eye on, and it's not necessarily a play on the Russell, which continues to be a tough trade, but we're seeing more and more of lesser known, smaller cap type stuff. When it gets attention, when sweepers do get involved, they perform well, right? So even though the Russell is still having a tough time overall, I still I want to keep tabs on that. You understand? I'm really like, anytime one of these smaller names even starts to see a little bit of nibbling, I make sure that I look at the company, look at the opening, I do all the work just in case there's some more flow to come. Because for the most part, when these smaller names have seen decent buying or accumulation, they've really, really performed well. Again, since the summer, late summer. Yeah, ET is another one. Like ET is one of the names. This probably caught the most amount of flow from where they started buying it. But again, every dip continues higher, right? Continues higher. So, again, nothing wrong with energy or energy related names. I would be careful, same thing like the semis or the quantumists. I'd be careful chasing, late in some of these bigger winners. I would kind of look for, to see action in some newer names potentially that show up. And that would be a good sign for the rally as a whole in that group. Okay, we don't have a shortage of setups. That's not the problem. I don't think that's the problem now, right? I think the problem is, when do sweepers light the match in these setups, right? So what that means in simple English is you have things set up, right? You have a lot of cyclical parts of the market. You got small cap, mid cap. You got a whole shitload of stuff out there in the market, excuse my French, that is in a much better setup. Okay? Now we just need that buying to come in, right? To get that momentum started. Because the problem with stuff that sets up, here's my definition of a good setup, right? Something that's been consolidating long enough that where people have lost interest, right? That's my definition of a good setup. Why? Because once sweepers start to step in an aggressive way, okay, that's our edge, right? That's the signal that tells us that whole lot of nothing that's been going on in that setup may be coming to an end. You understand? So when I say there are things set up, meaning that there are things that haven't been doing much and frustrating a lot of people, frustrating players, and players losing interest, where the overall flow starts to die down. And now, when there's an uptick in aggressive buying, it sticks out like a sore thumb. So you have, right? Like we looked at a lot of the groups already, the ETFs. You have material names, you have home builders, a lot of parts of cyclicals. I think the only thing right now that you would say may not be set up as well are some of the larger financial names. But they, prior to recent year, you had decent setups where they quiet down. So the issue is not setups. The issue is when do the funds, right? When do those institutions start getting excited enough to build positions in these setups? That's what we're missing. That's what we're missing. And again, overall, what we've been seeing in a lot of this bull market, more than not, that's been a problem in everything outside of tech, right? We've seen bouts here and there where they get excited for a couple months and then lose interest, right? But net, that's been the overall problem of this bull market. Been very concentrated, as you hear a lot of people talk about. So the setups are not the problem, just so you know. Or we got a lot of setups potentially. And market cap wise, you have mid caps, the whole mid cap. You got small caps. You got everything that's been out of favor for a long time. Let's see. What are you guys asking here? Sens is toxic. Sens. Well, this is a few of you are bringing up this Sens. This is one of the spec names that is still seeing a little bit of action. Is this Sens? But it's nothing major. It's cheaper action, and there's some momentum there. I don't know what's going on, but the point I made, I think it was on the last Thursday webinar, is that the problem here is you don't have that tide lifting all boats, right? Rewind to a month ago, you had where if they were sweeping a Sens, right, we all want to own it. We'd all be in it, no doubt already, because they were hatching like eggs one by one, right? All these little spec micro caps all over the place. Catch and flow, boom, explosion. Catch and flow, boom, explosion. We didn't even care about the fundamentals. We're just looking for a trade out of the thing. So now, outside of the last day or two, you had where you're buying a speculative name that needs to buck the trend. And again, guys, it's just there's a lower probability of success for a trade like that. Doesn't mean it can't work out, but the probability is a lot lower than where it was a couple weeks ago when they were buying all of these things, or a lot of these things, right? You never find out, like it always used to happen to me a lot, where I wouldn't participate as much on the first few names in a particular sector that caught flow momentum. They would always be the biggest winners, right? So pay attention to this in the future. You'll see it all the time. The first names that catch the interest, the sweeper activity, okay, are almost always the biggest winners of the group. Almost always. Okay? And then once you see a good amount of names, and as you get to that second batch of names where everyone's looking for the next so-and-so, those are always the ones that you end up getting stuck in and sitting in, and the momentum just dries out. Right? You have some of the bigger ones, they sell off, the bubble gets pricked a bit, and you're sitting right in a lesser type name, hoping to get what you got from some of those leaders. So again, that's what I'm saying. It's not right. I'm not saying you can't. You're not going to make money in a trade like this. It's just there's a lot lower probability of finding success now in a name like this than as opposed to a couple of weeks or a couple of months ago. Okay. Okay. Fast forward, right? Next week, 2 weeks from now, there may be another group. Like, look at the quantum stocks. Maybe you guys, I wasn't paying attention to any quantum stocks. I wasn't paying attention to any space stocks like Rocket Labs and the other one that went bananas before they started catching flow. These groups will pop up. All right, so I'm kind of looking ahead now, and now that we got a little bit of a nice rinse in these things, kind of looking forward to the next the next group that may show up. I'm not in Sens, Shank, to answer that question. What else? EOSE. Yeah, that I'd never played this one. It's kind of annoyed by it. I did play this one back a while back in 2023. So I think it was here. What is that year? Is this 2023? So I knew the name from back then. Then they started to sweep it up again, and I owned a few of the other crap names that were catching flow. So I just didn't want to add it, and it happened to be a nice winner. Now, I don't know if I would have been around to catch this here, because I probably would have sold into this heat, But yeah, still doing this thing. If you're in it, still doing this thing. I sold a lot of stuff that I left behind. I've been doing a lot of selling for weeks now. I mean, not even the last week or so, I already sold pretty much everything I needed to sell. But I had a lot, again, I call them runners, but a little larger size than runners, right? So if I make a nice hit on a trade in a name, I like to leave a little chunk behind, right? Remember I did it we were talking about with Soon, right? Like that type of thing. So you guys understand, like, for example, like Soon, right? I bought 35,000 shares initially for that trade. Now, this is a year and a half ago, not now, okay? And when I sold it, I left 3,500 shares of Soon. Right? And I just sold a couple weeks ago. That 3,500 that I left behind. So that's what I'm referring to as runners. I like to do that with names from time to time. But I trimmed a lot of those things. I trimmed a lot of those runners because I was more concerned with, those, they add up. You get caught in a drawdown in those things, and you have a lot of positions like that, it's gonna leave a hickey, right? A hickey from Kaniki. So I wanted to clean the slate. Like, I raised a lot of cash. I'm cool with what I left behind now, and I'm ready to fire when we get rolling again. So, and point here I'm making is a lot of the names that you guys are mentioning, the older names, I don't own any of them anymore. Very well. Like, I still own some Wolf, WULF, a couple of Bitcoin miners. I even trimmed a lot of those completely. EQT, I still own a piece of. But a lot of the other stuff, a lot of the names that we've played, I sold off. Schwab looks good. You got earnings. But, I mean, I like Schwab. Yeah, I don't know what the earnings are going to be like, Pat. But if you told me earnings were to be flat, let's say, like stock would do nothing, I like Schwab. I like Schwab. I think that's kind of the underbelly of financials that still has upside potential, in my opinion. Oh, you traded it today, in and out? Yeah. I thought you meant longer term, Pat. I thought you meant longer term. I did not trade it today. What the hell did I trade today? I traded one name today. You know what I've been doing, Pat? And again, not that I wouldn't recommend it to anyone in the STEAMROOM, right? Because it's not like I'm killing it or anything. But I've been finding a little more success when names aren't catching the action that I like. Usually I'm just doing nothing, sitting on my hands. What I've been doing is when there's some flow, even if there's some weekly spec action and uptick in it, and we're seeing program buying at the same time, if it's at a decent spot, I've been playing the levered ETFs. That's what I've been doing a little more. You know, that's what I've been doing a little more of. Because again, the names, just because the action and names, I haven't been impressed much at all. Much at all. And listen, that's I know a lot of the social media guys who troll me on here don't think it's a good thing, but you guys will understand when you hang around this game long enough, you'll understand. When there's nothing, and you almost always have an idea when you shouldn't be trading much, or if at all. When you get to a point in your career in this game where you have certain signals you're relying upon, right, and they're just not there, you have to go out of the box, right? You got to go beyond that to force a trade, something you may like personally, or you think this, or you think that. So you know when you're forcing trades. But once the longer you're in this game, you're not gonna want to do that, in my opinion. Unless you like pulling your hair out and losing money. It's frustrating. Chasing break even is frustrating to me, especially stuff that I know I shouldn't be trading. And I almost always, when I start handicapping the market on my own, you understand? Like there's no sweeper activity, and I'm just like, oh, I think the market's gonna bounce here. I know, like I had no confidence in that. I had zero confidence in that before I even pushed the button. Like I know, oh boy, this won't end up good. You know, I'm lucky if I come out of this break even. So I don't do it as, I'm not gonna say I never do it, but I don't do it nearly as much anymore. BB, there's been some flow because of rolling here recently, but prior to that, when the spec names were seeing action, there was an uptick in activity. But other than that, I don't know. There's no information I can give you that you probably don't know about already. You know, I don't. I don't know. Like to me, the reason why it was active flow wise was because of that spec appetite that was out there. Um, if going forward, let's say you get a little digestion here or a dip, and we start to see that buying show up again, I think that's a bullish sign. I think that would be a bullish sign. So that's what I would keep an eye on. You know, so if this thing kind of just hangs around here, or even if you get a little shakeout dip, but those core buyers are committed, they come back. Like that's what I would be looking for out of a BB. But other than that, I don't know. I don't know much about it. I know like this, unless it catches news, this is a tough long for me. You know what I mean? Like, what do they do now? What do they have, patents? Like you're talking about, I remember when they had that phone that was the hottest thing since sliced bread, the Crackberry. You kiddos don't even remember that, do you? You guys don't remember that phone, right? This phone was hotter than the iPhone when it was out. People lost their minds. You could send an email from your phone. Holy shit! Like they discovered fire. So that's where I know BlackBerry, as a company. What I'm asking you, Emerald, what do they do? What is it now? What are they involved in now? Is it basically the same stuff, or telecommunications and all that shit? You remember Crackberry, John, right? They used to call it Crackberry because people used to get cracked out. You talk about like addictions, like people are addicted to their phones now. Think about, it was the first mobile device phone that you could do all that shit with. It had like the little typewriter on the bottom part, little buttons. I fat fingered every time I hit a key, I fat fingered three others. Oh, wow. See, I didn't know that. I didn't know that. Cyber software. Interesting. I did not know that. So something different. Yeah, I didn't know that, Harold. So that's what I'm saying. I have nothing that to share with you outside of the flow that you can find useful. RIM, Research in Motion. Now wait, Research in Motion owned BlackBerry? That was the hot stock RIM, right? What was it? Or it used to just be Research in Motion, period. And then they changed the name? I don't remember. Yo, I still have one somewhere in my office. I still have one in one of these drawers. I kept it. I don't use it though. But I was looking at it not too long ago. It's hysterical. Yo, the keys. I looked at the phone. I'm like, look how little the keys are to like type, to write. How did anybody function? Like you try to hit the letter E, you hit like 6 other letters at the same time. You can't even hit it. It did. All right, so this is RIM and it changed to BlackBerry. Wow. Okay. I mean, that stock was on RIM was an animal. One of my 30 phones. Yeah, exactly. You had a BlackBerry in 2000. Everybody had one. If you were around, you had one. I don't want to hear from anybody. Everybody had one. A crackberry. Oklo. Again, these are past winners that still look good, right? So this is that a SPAC nuclear play that we've seen a lot of flow in, and has had a hell of a move, but it still looks really good. I'm unsure about these older names here. I really don't know. I really don't know. The flow. I'm not going to say you don't have any edge out of the flow, but there's a lot of rolling in these names, which takes away from the edge. You understand? And here's why, right? We talked about it. You get a move like this, okay? And not every move like that catches a lot of flow. There's a lot of excitement in this name, right? So you get a name that has no open interest, and all of a sudden, they're buying like the best instant sliced bread they got on their hands. Okay? Now, big winner, right? You got a single digit piece of paper now trading $30, upper 20s. A lot of the size that we see in this name are these guys adjusting positions, right? That want to stay in the name. They want to stay in the trade. So the difficult part about trying to read the flow in a name like this now is trying to decipher, to determine what buyer, right? What call sweep is a new buyer, a new player risking new money, or an existing player that already sitting on a shitload of profits, just adjusting his position again. So that's the difficulty here. And that's kind of the problem why, for me, I don't trade the same names. It's uncommon for me, right? So like in Oklo, right? Example, starts to catch accumulation at $8, right? Let's say I play at $8 with the rest of you and we sell it at 12 or 13. Okay. Very rarely am I ever gonna buy Oklo again in this uptrend. Right? If I liked Oklo, I probably gonna leave a piece that I own at a really nice entry, and I'm gonna hold it. But to put on a new position, like a new full size position, I very very rarely, if ever, will do it again up here. The only time I will revisit is if you get a cleansing, right? So if you get this, All right. So now you get the rinse, you wash out all these guys and all the chasers, and it goes quiet down here. Now, if there's some aggressive call sweeper activity that comes in here now I have an interest again. You understand? Like it doesn't have to come all the way back, but you know what I mean? There's got to be some either a pull or lengthy consolidation. But that's me. It's more of a preference thing. Again, just because I have a cleaner read out of the flow, I can have I I can have a ton of conviction when a name catches initial activity down here. Whether I'm right or wrong, whether I make money or not, is irrelevant to me. As stupid as that sounds, okay? Because I know, or I feel strongly that whatever buying I'm seeing is new institutional money coming in. I cannot have that same conviction anywhere up here again. Anywhere up here again. You understand? So I don't like to revisit the old names. Like what I would say is if you're in it, I would continue to hold it if you like it. For new risk, I don't know. I wouldn't buy it, but I don't know. I don't know. You got other names that look very similar, right? I think this came in a little bit more. SRE. This is one, right, in that group. This one, NE. And here's the other problem, guys. The other problem is this. When you get these big moves, okay, you're also prone to other risk. Secondaries, right? We're seeing a lot of these offerings now from these names. Okay? It almost rarely happens at initial activity, right? Those offerings always happen after the stock erupts and everybody is talking about it and holding it. So the moral of my story here is that here is where I like to build a position or add full size position. And here are just trades for me. Just quick trades. You understand? So, example, quick trade. Let's say Oclo here off a little breather, right? And you got a niner or something like that, and it catches some action. And then I'd look to trade that pop. That's it. In and out type stuff. But my bread and butter, especially for swing trades, it's this. All right, that initial activity. That's the key for me. The problem with the initial activity is you go through droughts, right? But it's a double-edged sword. That's a problem, right? You get frustrated, but at the same time, that has been my seatbelt. I tell you guys all the time, that has saved me from getting hit over the head. Okay? Because if I'm not seeing new initial activity, to me, that's a sign of risk appetite starting to wane. You understand? So if I'm never going to revisit the old names, I'm very less likely to get caught in a drawdown. You understand? Because I'm waiting for new names. Right? So for me, to get a gauge on whether this trend has legs, I want to see new names in that group continue to see buying. I don't want to go back and revisit names. Because think about how you could get in trouble doing that, right? Like, for example, last few weeks, we're not seeing any new initial activity anywhere, right? Very little, if any, okay? I could have very easily said, all right, you know what? Quantum names, there's a down day, I can buy that. I can buy RGTI. or even like these, right? You guys are asking me, and they still look okay, right? They still look good. But how do I know? How do I know which pullback is going to be the larger one? I don't, right? So think about that. That's a lot of risk I'm taking playing new risk up here. So for me, it's all the initial. It's all about initial activity. Even if it's not in names that I want to play, it's telling you, it's giving you a good gauge on risk appetite out there from funds, right? Retail will buy. They just keep buying the same names over and over and over again. That's where all that you see the call volume. Like we're not seeing any new initial sweeper activity, but you see call volume in the quantum names always the highest ever before they roll over. Retail they just keep buying, they keep playing on the way up. We don't want to tail that action. That's the last action we want to tail. But all my best trades or all anything I get excited about is all initial activity. When we made a play on these Bitcoin miners, right? It was because they were catching ridiculous action, initial activity at a new spot right here. Boop, the circle's there, right? So look at this, okay? And here, there's been flow in Wolf. I probably have traded it back here somewhere, okay? But then you get this, right? And then all of a sudden, in this circle right here, you get flow that looks completely different. Okay, it's not speculative, cheap buying. You got somebody building a position with time over the course of days, right? While the stock is kind of stuck in consolidation. Like that's the sweet spot for me. Navigating the rest of this here, forget, there's no rhyme or reason. But this, for me, is always the entry where I feel most confident, can get most aggressive, right? And gives me wiggle room to do whatever I feel I want to do here, right? I want to roll. I want to leave some behind. I want to get out of the whole trade. I can do whatever I want. But this entry here is the best risk reward. It depends. That's a preference thing too. Like for this stock, Pasqua, I bought equity. Like the equity was an option. I mean, my average cost on Wolf, I think, was like $1.90, if I'm not mistaken. $1.90. So I could have tailed, like they were buying, I think they were in the money leaps or $2 leaps. Like I could have bought those, but instead I just bought the equity. And I think the beauty of the equity was this thing, the equity is liquid. The options, if there's no momentum to come and you own size, it's not easy to get out of those, right? But the stock traded well over 1 million shares a day, well over. So there was a ton of liquidity equity-wise. So I have liquidity too. So it all depends. It all depends. Oh, the type of flow. I mean, there's a few different characteristics in it, but I mean the basic premise is it's like pattern buying, what institutional flow looks like. It's not flow that somebody is looking to, play for a pop or, out of the money lottos. It's somebody building a position in what likely owns the equity already and is just utilizing some leverage to put the cherry on top of the cake in the options market. And then a lot of times with that type of flow, what we'll see is we'll become aware of who some of those buys were, right? So like here, a few months later, when those 13Fs came out, we found out like Druckenmiller took a position, right? Some other hedge fund took a position. Like that's delayed information when you find that out. The beauty of the flow is when you see that type of action, you're seeing it in real time. We don't know it's Druckenmiller, right? But we know it's institutional buying. So that's my goal every day coming in, looking at the flows, looking for that type of order flow. Again, this bull market is one. I don't remember another bull market with a lack of that type of flow in names. Let me put that. I worded that wrong. The least amount of that type of flow in names in this bull market we've been in. Because you know why? The bulk of that action came in this. This is what they were buying. Right? So what the institutions were buying were these type of names. You understand? And that's all they were buying. Right? The semis and mega cap, and that's all where all the action is. So one, like for me, I like looking for new growth names, right? I don't play these names nowhere nearly as often. Okay? That's all they were buying. For what? A year straight of the bull market? Right? So up until the end of this summer, last year, the summer that passed, where we really started to see it open up a lot more, I was underperforming significantly because all the money was being made in these things, right? And these things you have to buy calls in these things. Right? You're not going to buy $1,000 stock equity unless, it's an investment you're putting away. You're not actively trading these names. So, but again, that's a perfect example. That was just the environment we were in. That's the climate we were in. I think that's the beauty of this game is it's not the same type of, it's not the same climate all the time. And you see, right now, whoever participated in those names, if they're still playing these names the same way, they've given a lot of money back. I mean, Microsoft hasn't done a damn thing in a year, right? I mean, the semis, you see where that becomes a problem. Like this, eventually, you're going to pay the piper. You're going to have to pay either via correction or lengthy consolidation, right? You remember the conversations we had plenty of times on this webinar. Nothing negative on the semis or any of the companies. It's just not only the magnitude of this run, it's the participation in that run. Because of how concentrated the buying was in the market, was focused on these names, they were just significantly overowned. Right? And think of it like you're running money. Okay, you're a fund. You're buying Microsoft. You buy LRCX. You buy this guy. You buy NVIDIA. Eventually, you reach a point in this rally where, if you're a fund, you already have exposure in these names. Okay, there's only so much exposure you could have in a certain amount of names. So the only way you can add exposure is if they correct, right? Or you sell and you get a better price and you can add again. And that's what happens eventually with these things. When you see every jabroni under the sun on social media talking about, oh, this one's going to keep going higher, and this one's going to keep going higher. Microsoft is the best AI play. Look at their numbers. Look at the right. Everybody already owns it. Doesn't matter. That company could be great, but everybody already owns the stock. So now what people are eyeing here, right? You've had this lengthy digestion. Okay, does it come out of here, break out of here, right? Or does the consolidation continue? You roll over, right? See, I'm a believer that if it does break out of here, you're going to see new semis involved. Now, I don't know how that's possible, right? Because there were a lot of semis that we know that were involved, but not even necessarily new leadership, but you're going to see new breakouts that you really weren't paying attention to in the last semi run. That's usually how it goes. It's not the same names. On Carter, that's like, those are the cyclical semis, more tied to the auto market that haven't really done well at all. They've been awful, right? So the semis that have done well are tied to AI, right? The semis that haven't done well are more cyclical in nature, tied to the auto market and stuff like that. And this is, look at this. Now, is it that, look, this is a big move, right? Oh, that's a big move. This is just, this is nasty, especially if you're in it. This is nasty. But this is my point. Like, you never know when this ends. You know what I mean? You never know when this ends. Flow-wise, you would want to see, and not just one sweep, you would want to see accumulation, right? So you would want to see some decent sweeper activity show up, and you'd be like, oh my God, all right, someone's buying on semi. Wow, we haven't seen flow in that name in a while, which we haven't. Okay? And then a day or two later, they're back again. And you're like, oh, they're adding on semi. And then the next day, they add again. They're like, whoa, God, somebody really likes on, right? It's almost like they almost force you to buy it. But in these type of names, that's the type of conviction that usually shows up when these things get hot. You guys know, you remember the type of action AMD used to catch when it was hot? I mean, you see NVIDIA what type of action it's capable of catching. All those names. So when these names are in play, funds gobble these things up. Off sweeps. They should change the symbol to off. Here. What else? What does he say? RW? Yeah, you want to see a month of sweeps? What's that? Which ones? Marvell is, Marvell, believe it or not, Marvell was kind of a laggard and AI related for whatever reason, and has finally been, the market finally rewarding them. But yeah, this is one of the better looking semis out there. No, looks really good. Marvell looks really, really good. And it's a great, Marvell is a great stock. Sometimes it can go dormant for a long time. It could be a pain in the neck. But company-wise, a good stock. And you had a huge breakout here too. It looks good. SMTC. I'm not as familiar in this thing. This thing's been hot too. Oh yeah. Not new highs yet though, but looks good. Looks good. And probably because their numbers, they got some growth too, probably, right? Yeah, it looks that way. So what else before we wrap it up? Anybody looking at so much short term zero? Yeah. Papu, is that Grandpa Papu? Oh, hey, zero DTE at all. A lot of people in the Steam Room play zero DTE, Lucci, a few guys day trade SPX. I don't trade day trade SPX and that type of stuff. You know what I mean? There's no real edge, especially these days, from the flow. Not to say there never is. I'm talking about on a day to day basis. If you're looking for an edge out of the flow for index trading, you kind of want to look at kind of like divergences, where let's say the market's selling and then a bunch of aggressive call buying comes into Microsoft, Apple, Netflix, right? If it's aggressive short-term buying, it's likely going to push the indexes higher with it. So it's almost a really good kind of sentiment gauge and works a lot better for changes in trends. But day trading SPX is that's I'm not ashamed to say it. You guys understand? I'm too old to be bashful and embarrassed. I didn't try to make myself look good to you guys. That's too difficult for me. You understand? It's too difficult. That's hard money. Day trading the S&P 500 is hard money. And you got to be a good trader. Right? I don't have that much. I don't have that much faith in my trading skills. Raw. I'm wired the wrong way. You understand? I have faith in my signals, a lot less faith in my skills. You understand what I'm saying? And whether you realize it or not, the majority of you here are wired the wrong way to trade the overall market off emotion. You understand? There's nothing you can do about it. And don't feel bad, because the majority of people fall into that category. There's nothing we can do about it. When you should be selling, you should be buying. When you should be buying, you should be selling. And that's a lot easier said than done, right? On top of, you got to be quick. That's probably the only thing you could be. Can you imagine me trying to look at the flow and trade SPX at the same time? My head would burst. So, I mean, again, people trade differently. That's the problem with trying to give blanket advice to people. You understand? Or tailing people. Like that people think you could just tail somebody's trades and make money. Doesn't work. I'm telling you, it doesn't work. You could get ideas from others and you can learn a lot from others. You could also learn the bad things from others. But the only way it can be done is you take the information and you find what works for you best. Right? The way you're wired, the time frame you can play on, the amount of attention and skill you have to devote. Yeah, and listen, I think day trading you got to be a realist too. You're not like the money is in position trading. That's where the bigger money is, right? That's where the larger risk reward is. Like if you're day trading, in my opinion, you got to look at it almost like betting the ball games. You're going to run into a lot more losers, and I think money management is a lot more important. It's important in general, but a lot more important than anything else. You know, I mean, based off history, your win ratio comes down significantly. The amount of profits comes down significantly because you're trading obviously a lot shorter time frame. So you got to be able to adjust your bankroll the same way, right? If you money manage correctly, you're disciplined, and you have more winning trades than losing trades. That's it. If you're looking for much better than that, forget it. Let me save you the agony. You know what I mean? If you're looking like, oh yeah, I'm gonna come in and all 10 of my day trades are all gonna be nice winners, good luck to you. But I mean, the fact is, some are better at it than others, no matter what. There are different types of traders. You're a lot more active too. You're a lot more active. So it's kind of a numbers game. But it is hard, and there's nothing easy in this game. The only thing easy about this game, John, the truth of the matter is, over time, okay, if you dollar cost average and invest in the equity market, you will make a good amount of money. I promise you. All right? That's the easiest trade in the book. There's no secret sauce. All right? If you dollar cost average into the market, especially into corrections, and you have that time frame where you can give it the appropriate time, right? You're going to make a lot of money. I'm convinced you're going to make more money than anything else, real estate or any other shit like that. I know the real estate guys will argue with it to my deathbed. But even if you make more money than real estate, a little bit more money, right? If you're going to make that argument, equity market's so much more liquid. You press a button and you're in cash. The real estate market, good luck. Good luck getting out of real estate in a correction. Sale! Yeah, I know. I thought, again, Norris says this all the time. Anytime I say it's probably going to be a short webinar, I'm usually on here shooting the shit with you guys for a few hours. Usually for a few hours. But anyway, the moral of the story here, guys, the whole conversation we had. Monday, by the way, Monday, those of you who don't know, Monday the market's closed for Inauguration Day. Martin Luther King. Like I say, he complains making money. He's got a real job. He's got a real job. Right, RW? Yeah, you can. I mean, equity market is as liquid as you're going to get. You press a button, you can get out. God forbid there's an emergency in your family emergency, or something happens, you need to raise cash. You're not going to have a problem in the equity market. But, other things, and real estate is like kind of what everybody compares equities to, right? It's not liquid. So I think that's the beauty of it. But the point I was making about that anyway is that that I think when you talk about easy trades, that's the easiest trade, right? If that's what you're looking to do, like you have, that's what all you should be doing anyway on the side of your trading. That should be your goal no matter what. Especially if you're younger, especially you young guys. And especially I think even more so when the market's bad than good. But every so often, make it your business, to put some money into the equity market, whatever it may be. The major ETFs, a couple names you like, a couple of speculative names you add. Not all speculative names, you degenerates. And you younger guys, those of you in your early 20s, oh my God, man. You don't realize time goes like that, and that shit adds up. Yeah, no. So we were talking about that earlier. It's been tough sledding out there. This, and I think for longs and shorts, there are periods where shorts had some momentum to make some money, but otherwise you got to be really quick out there right now. Especially with options, you got to be extremely quick. If you're day trading options, oh my God, you got to be really, really quick. And the for swing trade purposes, it's not that even stuff has been getting beat up that much. Is that the reward side hasn't been worth the risk, right? So that's kind of how you got to look at things for any new risk you're looking to put on. Is the upside worth the risk that I'm looking to take? I'm not talking about holding stuff that you're up and your positions, core positions. I'm talking about new risk. So now we're going into the heart of earnings season, and we're at an interesting point in this market here. I think and here's why I say that. Okay, well, I feel like if this is just a local high here, and we kind of are still in this kind of orderly correction, right? I think a lot of good is going to come out of that in 3 weeks once we get through the heart of earnings season. So we're going to have a lot of things set up nicely. And if we happen to start seeing some new buying coming in, that's going to be a nice spot. Sentiment's going to look better. Positioning's going to look a lot better. So the next few weeks, I mean, it's not a bad thing if we kind of mess around here. You understand? Chop around. It's not the worst thing in the world. Yeah, well, so here's right. Like you kind of, and we saw it yesterday, right? So day trading wise, that's where you kind of want to be on the long side. That's where you want to get in the middle of, to CEO's point. VIX kind of unwinds, and the opposite. When the opposite's going on, that's where you got to be careful on the long side. And if you're playing the short side, that's where you can probably make a little bit of money, right? And this too has worked well, right? We've been talking about this for a while now, right? VVIX. I mean, guys, this has been a really nice indicator on a short-term time horizon, right? So when this VVIX is big, okay, and a lot of times you'll see the equity market could be up sometimes when VVIX is big. That's a good sign to step aside because, there's probably going to be a nice rinse. And then when you get this unwind, right, you got a couple of days where you're going to have some decent momentum on the bull side. But you could see, right, like it's been a lot of up and down. It hasn't been a complete unwind here. It's been a lot of choppiness, and hence why there's a lot of choppiness in equities. Yeah, big OPEX tomorrow for individual names. So listen, this was a tough week for flow. Next week is going to be a tough week. A little cleaner because we don't have OPEX, but you still got earnings, big earnings. Netflix is next week. And then I think the week after that, too. So the next 2 weeks, I wouldn't, the flow I use just for day trading purposes only, primarily. Those of you in the steam room, if I see anything remotely that looks anything close to being clean, I'll make sure you know of it. But then once we get past the next 2 weeks, I think there'll be some things to get us excited. Knock on wood. And let's see, you got the inauguration. Kind of to Ranchero's point, one thing goes sideways, you might have a nice round of volatility. So let's see how they shake them out. But I think a good time to pay attention, keep an eye on certain setups, especially those sectors out of favor, and see some post earnings reactions too. Be a lot of information there. All right. So here, buddy, I'll see you mañana. All right, and the rest of you guys in the steam room, I'll see you tomorrow, Friday OPEX, before a long weekend. For the rest of you, always a pleasure. Thank you for stopping by on a Thursday, spending some time. And I'll see you guys next week. Good luck mañana. Have a good night, everybody.